These funds are likely to appeal to a broad swath of investors. You can make a complete portfolio from these three closed-end funds. Amplify High Income ETF. Its double-digit yield is attractive to income investors. BlackRock ESG Capital Allocation Term Trust. The active fund combines equity and fixed income investments. Aberdeen Total Dynamic Dividend Fund. It has beaten its underlying index over the long haul. Let's dive in. Here are the three closed-end funds to buy with big discounts. Welcome to Timely Investment Research. If you're looking for the best closed-end funds to buy, it helps if you understand what they are and aren't. They are similar to initial public offerings in that an amount of capital is raised at the launch. The portfolio managers responsible for the closed-end fund then invest the funds. Closed-end funds resemble an investment company more closely than an open-end mutual fund or exchange-traded fund. They are called closed-end funds because once they raise funds through an IPO, they are closed to new capital with a few exceptions, and they trade like stocks on U.S. exchanges. If a closed-end fund uses leverage, it can issue debt and preferred shares to grow the asset base. In addition, it can make a secondary share offering to raise additional equity. A big reason for investing in this type of product is that there are many closed-end funds with significant discounts at any given time. Here are three to consider for your portfolio. Number 1. Amplify High Income ETF. Amplify High Income ETF is a fund of closed-end funds. It tracks the performance of the ISE High Income Index, a collection of 45 closed-end funds that are ranked based on their yield, discount to net asset value, and liquidity. Reconstituted and rebalanced in January and July, no index constituent may exceed an initial 3% weighting. Amplify High Income ETF currently pays a monthly distribution of 12 cents a share. The annual rate of $1.44 yields 12.4%. As of March 31st, the closed-end fund traded at an 8.86% discount to its net asset value. In 2022, it sold at a premium 60% of the time. As closed-end funds go, Amplify High Income ETF is dominated by bonds, which account for 83% of its $345.3 million in net assets. As a result, the fund is focused on income generation rather than capital gains. Since its inception in June 2013, the fund has achieved an annualized total return of 4.1% on its net asset value, 39 basis points higher than its index benchmark. The top three closed-end fund providers in the fund of closed-end funds are Nuveen, 20% of assets, PIMCO, 18%, and Franklin Templeton, 10%. Amplify High Income ETF has a high total expense ratio of 2.72%. However, 2.22% of the total is for acquired fund fees from the 45 closed-end funds included in the portfolio. So you'd have to pay these fees if you bought all 45 closed-end funds without Amplify High Income ETF. Number 2. BlackRock ESG Capital Allocation Term Trust. The BlackRock ESG Capital Allocation Term Trust is considerably larger than Amplify High Income ETF, with net assets of $1.8 billion. It is an actively managed fund that can invest in public and private markets across different asset classes. We believe that a generational shift towards sustainable practices, coupled with a large reallocation of capital towards ESG, presents a long-term investment trend. BlackRock ESG Capital Allocation Term Trust closed-end structure allows the management team to identify what it believes to be advantageous capital appreciation and opportunities from around the globe, states its fourth quarter 2022 update. The breakdown between equity and fixed income is 66.5% and 42.5%, respectively, with 8.91% in cash, representing the closed-end fund's use of leverage. The top three weightings by geography are North American equities, 45%, North American fixed income, 38.5%, and European equities, 17.7%. The top three weightings by sector are technology, 16.2%, healthcare, 13.2%, and consumer discretionary, 8.7%. BlackRock ESG Capital Allocation Term Trust currently trades at a nearly 12% discount to its net asset value. Charging 1.33% in fees, the fund launched in September 2021. It has 373 equity and fixed income holdings. One of the top 10 equity positions is LVMH, one of my favorite global stocks. Number 3. Ebrn Total Dynamic Dividend Fund. Ebrn Total Dynamic Dividend Fund's primary investment objective is to generate high amounts of dividend income with a secondary goal of capital appreciation. The actively managed fund has $990.7 million in net assets, charges 1.14% annually, has a monthly distribution of 0.0575 cents per share, and trades at a 13.9% discount to its $9.48 NAV. Return of capital hasn't been discussed yet in this video. Closed-end funds routinely return shareholders' initial capital to ensure consistent monthly distributions. Return capital is not taxable. However, it reduces your cost basis, so your taxable capital gains will be higher when you sell. So consider it a form of tax deferral. That's good, especially if you're in a higher tax bracket. In the case of Ebrn Total Dynamic Dividend Fund, 47% of the latest monthly distribution came from net investment income, while the return of capital accounted for the remaining 53%. As for the assets held by Ebrn Total Dynamic Dividend Fund, except for cash, they are entirely equity holdings, 92 to be exact, with the top 10 holdings accounting for 17.7% of the portfolio. The top 3 sectors by weighting are technology, 18%, financials, 15.7%, and healthcare, 11.6%. The U.S. accounts for 56.4% of the net assets, with no other country having a double-digit weighting. Over the past 10 years through February 28, the annualized net asset value total return after fees is 8.35%, 42 basis points higher than its benchmark, the MSCI All Country World Index. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.